Good morning, everybody. We have a mixed trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. July corn futures up 3/4 of a cent at 6.65 and a quarter. December corn is down 3 cents at 5.52. July soybeans down a half cent at 15.36 and a half. November soybeans down 1 and a quarter at 13.77. July Chicago wheat is down 4 cents at 6.72 and a quarter. July Kansas City wheat down 4 and a quarter at 6.22. July spring wheat up 4 cents at 7.21 and a quarter. If you're listening on the podcast, as always, appreciate it. Leave me a review, leave me a rating if you haven't already. If you're watching on YouTube, make sure you hit the like button. Make sure you subscribe to the channel. I'm very, very close to that 2,000 subscriber mark. That is the goal here, guys. And if you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I offer a subscription service. It includes my morning email newsletter, which goes out every business day at 6:30 a.m. Central Time. It includes every overnight headline you need to be aware of, all sorts of interesting charts, graphics, grain marketing information, cash sales options, capture and carry, all that stuff. There is a text message service that accompanies this, subscriber-only videos and content, which have been very popular. Certainly check this out. $49 a month billed to your credit card. Cancel at any time. We have had a real roller coaster in the corn market here over the last 2 or 3 days. So on Tuesday, we had nearby corn futures limit down. We were able to rally off the lows Wednesday, and then we were limit up at one point in the July corn contract yesterday. I think a lot of this has to do, some of it at least has to do with this story regarding China and the potential for cancellations. So Monday, Tuesday this week, there was this chatter and then a story from Bloomberg regarding China clamping down on commodity speculation and hoarding. The article suggested at that time that Chinese buyers would cancel up to 1 million metric tons of U.S. corn purchases. That's a pretty small amount in the grand scheme of things. So I think that perhaps the initial chatter early in the week, which was then followed up by a confirmation that the amount would really be kind of small, is partially responsible for all of this. I mean, the initial chatter before you saw any details was kind of scary. Maybe that helped to lead to the sell-off. I think that the rains that pushed across the Corn Belt and are pushing across the Corn Belt had something to do with it also. But you had the chatter, and then you had the confirmation that it really wasn't much of anything. And then in addition to that, there was no confirmation in yesterday's export sales report of cancellations. As a matter of fact, China was a net buyer of old crop U.S. corn as of May 20th at least. Now, we could still see some cancellations reported today or early next week, but for right now, that story was a whole lot of nothing, and perhaps was at least partially responsible for the big volatility in the corn market. Now, speaking of corn exports, new crop corn export sales are the best on record seasonally. USDA reported yesterday that 5.7 million metric tons of new crop corn was sold on the export market in the week ending May 20th. That's 224 million bushels. China was responsible for almost all of those new crops corn sales. So corn export sales for the next marketing year are up 332% versus the same date last year. New crop corn sales to China seasonally up more than 1,200% versus the same period last year. So global buyers, China included, are buying new crop corn very early and very aggressively, I think largely due to the inverse in the market. I think that has a lot to do with it. New crop soybean sales are also strong. Total new crop commitments are the best since 2014 seasonally. They're up about 32% versus the same date last year. China accounts for, I think, 42% of the new crop soybean commitment. So as with corn, you've got this inverse in the market, which is perhaps inspiring some new crop buying. Rains push across the eastern Corn Belt this morning. The radar is pretty active across a lot of Illinois, Indiana, Ohio, Michigan. Over the next 7 days, we'll see more minimal amounts over the western Corn Belt. Iowa, Nebraska, Minnesota, the Dakotas, Wisconsin. Those areas caught some nice rains here earlier this week, though. Your next significant system for the western Corn Belt in particular may occur around that June 6th or 7th time frame, according to this morning's GFS model. Now, keep in mind, we've got a 3-day weekend coming up, and I just feel like in my experience, these 3-day weekends are notorious for shifts in the weather models, so be prepared come Monday night. The stock market rallies amid President Biden's supposed $6 trillion spending proposal, which I believe will be unveiled today. The S&P 500 is less than 1% from all-time highs this morning. It could very easily achieve new highs today or early next week. So Biden's plan, which is not official yet, but I think he's going to unveil it later today, includes $6 trillion in spending for the 2022 fiscal year. The government, according to this deal, would run deficits of $1.3 trillion annually over the next decade. The bill is supposed to be paid for through increases on taxes of corporations at high earners. This is all according to sources who have apparently seen White House documents. Budget deficits would start to decrease by the 2030s, according to the same sources who had obtained White House documents. So kick the can down the road another 10 years and we'll start paying for this stuff, I suppose. The U.S. dollar trades higher today ahead of government inflation data this morning. We've got the core PCE data out later today. The Fed watches this stuff pretty closely. I don't think the Fed's going to be convinced anytime soon to raise rates, but they're looking for a 2.9% annual increase on the month of about 0.6%. The cattle market was just kind of mixed yesterday, up 10 cents, down 10 cents in the fat cattle. The feeder cattle took it on the chin with this higher trade in the corn market. I don't think cash cattle has done anything real exciting here yet this week. Still that 119 to 120 trade. We'll see what develops here today. In the outside markets, the S&P's up 15, the Dow's up 160. Gold's down $4, silver down. U.S. dollar is again a little bit higher ahead of that inflation data. Crude oil's up 40 cents, 67.25, creeping back toward those highs. Bonds are up just a little bit. Remember, guys, 3-day weekend following today's grain market close. We will reopen Monday night at 7 p.m. Central Time. Everybody have a real nice Memorial Day weekend. I will talk to you on Tuesday.